Crow, another session of MICCI Crow series to bring you riveting insights into capital statement review. Hi, I'm Sean from the Malaysian International Chamber of Commerce and Industry. We are the oldest chamber in Malaysia, and we have approximately 1,000 multinational companies, local companies that do businesses overseas, and the ecosystem around it. As one of our so-called Crow experts, we have a series now. The question that begs is, how does the Inland Revenue Board know that you are under declaring your profit or income? The capital statement is very simply, your income should be equal to your spending plus savings. If both of them don't reconcile to the income, that means that that is an allusion to under declaring. So to give us a better insight into how can you manage a capital statement review by the Inland Revenue Board, we have today Ms. Wong Man Yi, Executive Director of Crow KL Tax. Well, for the past 15 years, she has helped clients to comply with various tax compliances requirements. She's also involved in many various tax advisory and planning assignments. And now, one of our reasons for this webinar is that she's assisting clients or yourselves to resolve tax issues, tax disputes with the tax authorities to reach an amicable resolution. So can I welcome Ms. Wong Man Yi, or should I call you Man Yi? Are you ready? I think you're still on mic. Okay.
Yes,
Thank you. The floor is over to you, and see you a bit later during the Q&A. Over to you.
Thank you so much. Thank you so much to Sean. Good afternoon, ladies and gentlemen. I hope you and your family in a good health. Thanks to MICCI for organizing this event. It's really my honor to be here to share with you on today's topic. Are you ready for our capital statements review? Okay. Before we start the session, just run through the disclaimer quickly. The information in this presentation here are general in nature, and then which is based on the existing rules and current practice that could be subject to change. And the information here is not intended to be the professional advice, and you are advisable to consult your tax consultant before you take any further actions on this. Okay. Just a minute. Let me use my pointer. Okay. So at a glance, for these sessions, I'm going to share with you on the potential threats that you need to get to know or you need to be aware of on the capital statement. Then after that, we will go through the Q&A that you have submitted together with the registration form previously. Then after that, we will go through those questions and answers, those questions that are posted in the Q&A box here, or those questions posted in the Facebook if you are a Facebook audience. So lastly, I will also share the key takeaways from the sessions here. Before we start the session, let's do this poll questions 1 to allow me to understand you a little bit better. So do you know what is capital statement? So you could answer yes, I know capital statement. B, I never heard about capital statement. C, maybe. Maybe that means I heard a little bit, but I'm not sure how to do that. I don't know what is really about. Just heard a little bit on that part. So you may choose any one of the questions, any one of the answers here. And then for those Facebook audience, you may type your message in the chat box, in the comment, whether you are under A, B, or C category. So I'll give you 5 minutes on this. Sorry, 5 seconds. 5 minutes is too long.
So if it is for first poll, just put in 1A or 1B or 1C.
Yes, correct. So I can see from the Facebook comments, some comment A, they know what is the capital statement about, and some talk about C, not so much on B category. C is maybe. So maybe we can see the poll answer here. That's good. So at least 57% of the audience or the participants here know what is capital statement about. So let's move on to poll question 2. Have you ever prepared your capital statement? Since we have 57 people know about capital statement, have you prepared your capital statement? Need to answer that genuinely, okay? So let's see what is your answer on this part. Same time, 5 seconds on this.
So do you normally prepare this only when it's audit, or you're not? You're going to tell us later on, is it?
Yes, correct. I will tell you about the time frame, and then do you need to prepare that or not? And one of the participants also posted the similar questions in the registration form, where I will share with you more on my comment on that part. So can see from the Facebook comment that quite a few people comment that for question 2, the answer is B, never prepare. And from the Zoom here, we can see 57% say they don't know how to start. Hopefully after this session, you have a better idea how to start, at least where to start. So without further ado, let's start the session. Why capital statement matters to you. So this beautiful chart shows us the overview of the government's revenue or tax collections from 2014 until 2020, and the forecast collections for 2021. So the green line represents the KPI set by the government, whereas the orange color here represent the actual tax collections by the IRB. So what can you note from this chart here? The first thing is the orange color is very near to the green color. That means the IRB is putting a lot of efforts to meet or close their KPI as much as they can by hook or by crook. So you can see that in 2019, the second point is in 2019, the highest tax collections by the IRB is 145 billion so far. And then in 2020, there is about 15% lesser or reductions in 2020 because of the economic environment, which is reduced to 123 billion for the tax collections. But for 2021, you can see that the KPI being set by the government is 143 billion. It's quite close to 2019 figures. So how are we going to achieve this 143 billion tax collections in 2021 here? So this is the information provided during the budget announcement in November last year, where we could see that the government has collected the total revenue by the government is about 227 billion, and for 2021, that means this year, our government is expecting to collect 237 billion, is about 4% increase. But if you look at the pie here, the income tax collection is expecting to increase by 15%. So that is quite a lot as compared to the total collections here. So when you take a closer look on the total tax collections of the 14.6% here, you may note that 8.8% is come from corporate income tax, whereas for the individual taxpayers, our government is expecting to have 18% increase of the tax collection from individual taxpayers. So that's why our government is targeting to collect 42 billion from individual, for all individuals, including you and me as well. So how the government is going to do that? Based on the four measures outlined by the government. So you can see that enhancing tax audit and compliance is the most controllable actions or measures by the government as compared to the other 3 bullet points, like improving economic conditions, higher earnings expectations, higher average oil price, stable employment prospect, and sustained wage growth, especially with the current situations here. Are we able to achieve the other 3? So for this, and enhancing of the tax audit and compliance could be the most controllable. So are we expecting more tax audit and investigations in 2021? So 2020 is an unprecedented year where our government has launched in total 5 stimulus packages over the years that worth 305 billion. So we have continued to launch another 4 stimulus packages in 2021, with total value of 225 billion. So back in April 2021, our current Prime Minister claims our government doesn't have much money left after COVID-19. So it says that federal government's coffers have been significantly thinned out to prop up the economy and help Malaysians in the COVID era. So subsequently, on 26 April 2021, so MOF also say that government has no choice but to withdraw 5 billion from KWAN, that is National Trust Fund, to for the COVID-19 fight, as finances near limits after one MDB scandal. Then our finance minister also mentions that the statutory debt level is currently 58% and nearing to the 60% ceiling. So that is quite a serious level on that part. So another point is the tax compliance in Malaysia here always very commendable. And you can see that our individual total population is 34 million. And how many percent? Is only 2.27 million individuals are the registered and paying tax. That means it's only 15% of the labor force who are paying income tax. And in respect of the companies, we have in total about 1.2 million companies registered with CCM. But the companies that are paying tax is less than 200,000 companies. That means more than 1 million companies are not paying tax. So that's why enhancing of the tax audit and investigations is always one of the missions or objectives of the IRB. So under a normal desk audit by the IRB usually will scrutinize the reports or declarations in your income tax returns. How you get your business income, is that correct or not? Then have you declared all your employment income, including all your directors' fee, bonus, share options, all these? Then rental income, have you declared that? Then for the personal relief, have you keep or retained all the supporting documents? They will ask you for the supporting document. This is exactly the same manner like what and how we declare our income tax returns, so which you are very familiar with. But however, the IRB may also apply another method to compare your net assets with the income that you earn. So this is your net asset, then they will compare with the income that you have earned. If there is any discrepancy, then they may take that as the under-declared income. So we call this as an indirect method. So how it works? So in these illustrations here, for example, Mr. A, his net asset as of 2018 is 5 million from all the assets that he owns, properties, car, shares, director's loans, all these advances. Then he has a net assets of 5 million. Then in 2019, his net asset increased to 8 million. So there is an increase of 3 million here. Then the IRB will ask, where is the 3 million of the source of income for Mr. A to support the increase of the net asset here? So say Mr. A disposed of one of his property, he has a capital gain of 500,000, he's still left with 2.5 million that he needs to justify where is the source of revenue. So we also need to take into considerations of all the personal expenditure, personal expenses. So say 200,000. So in total, he needs to justify 2.7 million where is the source of revenue. Then when IRB compare the income that being reported in the income tax returns and including all the non-taxable income, could only get 2 million ringgit. So where is the 700,000 came from? When the taxpayer unable to justify where is the source of revenue for the 700,000, the IRB may take this as an under-declared income and ask the taxpayer to pay income tax on this portion here. So this is how the indirect method works, and this will be the focus of our today's discussion session. So the indirect method could come from capital statement, net worth analysis, or min tax, where I will share with you more later. So presently, there is no statutory provision in defining and authorizing use of indirect methods of proof. But some taxpayers may not be able to accept this method because they are saying that when I'm being requested to submit my personal income tax returns, I use the format like business income, employment income, rental income, minus all the personal relief. And no one asked me to do a capital statement to match my assets with my incomes here. Then how come when IRB come over to do an audit and investigation, they use another method and not the way that I calculate or declare my income tax returns? So, but from the overseas case law, this indirect method is accepted as a fair and reasonable way of determining taxpayers' income. So that's why the IRB still have the right to use the indirect method to calculate or to determine any underreported income. So you may ask another question: how IRB get to know my asset? So you would not be surprised that with the today environment, with all the big data analysis that the IRB has this partial power data. So each and every company needs to submit their income tax returns. From there, you need to mention how much of the director's fee paid to each director, then how much of the loan or advances from the directors to the company. When there is any loans or advances from the directors to the company, the IRB will question where you get all this money from in order for you to borrow or advance this money to the company. So all these will become the information for the IRB, and they will compile all this information and before they start the audit or investigation. IRB could also access the CCM to get to know how many companies that you have, so how much of the share cap that you put into each company. They can access to Royal, the customs system as well. So previously they will check the information declared under income tax, whether it can match with customs or not. Then the stamp system, if let's say you have any properties and being tenanted out, but you didn't declare your rental income, from the stamp system, when the tenant bring the tenancy agreement for standing, the IRB will key in and they have the data on you are the owner and you have rented to this person for how much of the monthly rental. Then in your income tax return, your rental income is zero. How could it be? So that will also give a curiosity for the IRB to start to ask the question. So they could also access the DebitJet to see how many cars that you have. In certain cases that we handle previously, our clients, sometimes the IRB information could be more comprehensive than the clients. So sometimes our clients could have certain cars that under their own name, but the car is used by their relatives, by children, by other persons, but they can't remember that that car was registered under their name. Then after we submit the documentation to the IRB say that you still have certain car with this car plate number that not included in your capital statement. So you can see and imagine that how powerful and where they get all this information. The client also caught in a surprise that IRB get to know this car plate number and the model as well. So the IRB could also get your bank account information from the Bank Negara Malaysia, then how many properties that you have, either from the property developer information or the land office data. So for property developer, it is very often for the IRB to send a letter to the property developer to ask them what are the projects that you have launched this year, who are the buyers, how much is the purchase consideration. So they will key in all this information into the system called SMUP. This is a portal owned by the IRB. So for example, if let's say you purchase a villa with a sum that without any bank loan. So when the IRB gives this letter or ask a property developer to key in the data, so IRB can see that there is no loan for this person, for this individual to purchase this property in that year is with the paid with full sum. And when he looks into the income tax returns of this person, every year paying very, very minimal tax, the chargeable income is very, very minimal. Would the IRB have any curiosity to ask further where is the source of funds for him or for the person to buy the assets without getting a loan? So IRB also have a team to monitor all the social media, Facebook, Instagram to see the living expenses or the living style of the taxpayers if you are under the spotlight or you are under targeted area. So they will also monitor all the newspapers. And then in 3 years ago, the IRB also received the information through this common reporting standard, or in short, we call AEOI. So what is this AEOI? This is quite a hot topic in the recent years, in the 2-3 years ago. So under the common reporting rules, a Malaysia financial institutions, for example, Maybank, are required to collect financial accounts information from all non-residents. Say Singaporean open a bank account with Maybank. Maybank are required to provide the information, the Singaporean bank account information to the IRB by 30th June annually, beginning 2018. So about 3 years ago, they already started to have this. So how this could apply to you? For example, by applying the same mirror, a Malaysian couple open a bank account in Australia. So when they open a bank account in Australia, the Australia Financial Institution, Australian Bank, will give this information to Australian Tax Authority. Then Australian Tax Authorities will exchange the information with IRB, where IRB will get to know you have a bank account in Australia with how much. This is how it works. So this is quite a powerful data or information received by IRB since 2018. So other than Malaysia, there are another 101 countries are committed to this AEOI initiative. So it's worth for you to take a look on this list here to see whether you have any bank accounts in these 101 countries here. So most of the developing countries and tax haven countries are in the list here. So for example, Singapore, where you can see in the items of 87. So Singapore, you can see here, Australia, where you can see in item 7, China in 23, Japan in 52, then UK, New Zealand, BVI, Cayman Island, all these are in the list here. So why they are color in red color? Red colors refer those 67 countries that the government has already received the information from these jurisdictions as of January 2020. So the remaining, the black color one, that means the IRB is going to receive that soon in the future. So sometimes my client will ask me, since the list is so long, why don't you tell me which are the countries not in the list here? So I think for today's sessions is going live in Facebook as well. It's worth for you to take a look and try to see which are the countries not in the list here. So this could be your today's homework. Okay. So recently, as you may aware, that the IRB has also included a new disclosures in your income tax returns, either Form BE or your Form B. Form BE, that means you are submitting your income tax returns without any business income. Form B is with business income. There is a new disclosure where you need to disclose, do you have any financial accounts outside Malaysia? You need to declare yes or no. So I'll give you an example. Some taxpayer asks us, I have the overseas bank account. May I choose not to declare money? Then I told them, how would it be? So if last year we are quite honored to have invited one of the IRB officers to be our panel, and we also talk about this as well. So the officer also highlighted to us that from their red flags, from their system, how they pick up. So for example, if a taxpayer, there is a bank account in overseas from the AEOI information that they have received, but the taxpayer, when they declare in the income tax return, they say they don't have. There is a mismatch of information here. So it's quite easy for the IRB system to create a red flag and ask and allocate this case to the officer to look into it and see what happens and which is the correct one. So if you declare incorrect returns or if you have if this is any mismatched information, may lead to any tax audit or investigation. Okay. So upon seeing your foreign bank accounts, the IRB may ask not just your bank account, you have your property, your car, your shares, all the assets that you have. Then the IRB may ask the next question, do your assets appears to be disproportionately more than your declared income? That means your asset is very, very high here, but your annual income declared every year also very, very low. How to match that? Then the IRB will start to take certain actions, either by calling you, give you a love letter, or invite you for a coffee, for a discussion or meeting session. Then only that they will talk about what is the next part. So they may ask you to prepare your capital statement, or your net worth analysis, your mean tax. So in layman terms, all these documents like your personal balance sheet and P&L. So when the IRB requests or asks you to prepare a capital statement, usually this is the letter that should be delivered to you. So it mentioned that within 30 days, then you need to provide your capital statement. So just now, Sean also asked a question, can I not to prepare first? You are only given 30 days to prepare your capital statement. Some more, when you look into the letter here, the years that they have requested is 2014 to 2019. Would you be able to compile all the documents within 30 days? Then when you look into the items here, they ask for a very, very detailed and comprehensive information and documents. They ask you how much is your expenses, including your family for these years. Then they ask you to provide and declare all the assets, all the liability, business, either under business or under your own name, including your spouse, your children, as at this date. So as and when you are being requested to prepare a capital statement, usually the capital statement will include your spouse, your children as well. So this is how the assets looks. This is how the letters looks like. Then they will ask you to complete the cost or the expenses, the personal and private expenses for these years that they have requested. So the listing could be very detailed. Then they will ask you, this is the balance sheet. Just now it looks like a P&L, all the expenses that you have. So this is like your balance sheet. So they've asked you to list out all the assets that you have for the same years of assessment as well. So if you are being requested to prepare a net worth analysis, which is quite similar to the capital statement, because capital statement usually is conducted by tax investigation department, and net worth analysis could be conducted by any Cawangan assessment branch. So you are given 14 days to prepare your net worth analysis. It's also for 5 years, for 2013 to 2018 in this case here. Or the IRB could prepare a mean tax. It is much more simplified. It's no longer year by year, but they take the opening year and the closing year, how they do that. So you can see that in this case, this is the first letter that received by the taxpayer. You may get a surprise on that. The taxpayer also find out, how IRB get all this information, and this is my first letter received from the IRB. I never provide any documents to them. So IRB, based on the IRB records, they say that in 2014, I can see about 210,000 of the net asset that you have. But in 2017, because of the OECD, the AEOI because of the AEOI information, then they can see the overseas bank accounts, all the account balances with 6.5 million here, and the total net asset is increased to 17 million. So the IRB starts to question where is the difference come from, where is the source of revenue. So from this 17 million, so then they say that since you have already declared the 7.4 million, then you have a capital gain of 5.3, you're still left with 4.8 based on our current findings by the IRB. So would you be able to tell us how you finance your 4.8 million here? So this is how the IRB go and tell you these are the information that they have. Then you need to start explain on this part here. So sometimes during the tax audit, halfway of the tax audit not yet finalized, the IRB has already prepared this mean tax and say that based on our information. So you can see this is up to 2020. So definitely it is conducted in 2021, because some people asking and say that 2021 most of the times are under various MCO. Is IRB still very active or not? Where you can see this as well. So 2020, so they still conduct audit and investigation. So they have tabulated out how much of the properties that this taxpayer owns in 2017 and 2020. So the motor vehicles, the bank balances. So you can see they only take 2020. They don't have the opening capital. If you are unable to justify, unable to provide supporting documents, you are assumed you have zero. Then they will take this as the income that you earn during this period of time. So for those red colors are the estimations, because the IRB may not have full information, like all the furniture and fittings, jewelries, all these could be based on estimations by the IRB. Then they will list out your liability. then this will be your net assets that they are looking at. Then they will compare against the income that you have reported over this year. Then after that, 2000, that means 18, 19, 20, 20. These are the 3 years. So the capital gain or loss. So then they will see how much is the income that being underreported. In this case, they are looking at 2.5 million. Then they will multiply with your personal income tax rate, either 28% or 30%, and impose another penalty of 45%. And they treat this as under-declared income if you are unable to justify that. So this is how serious is that for our capital statement. So after talking for so long, what are the components, what are the things inside the capital statement? So it makes up of all these 7 major items here. So it includes all the assets that you have: properties, vehicles, yachts, planes, jewelry, computer, investment, either quoted investment, unquoted investment, advances or loans to others, bonds, coupons, saving, deposit, all kind of deposits. Then you will minus your liability, all the bank, personal loan, overdraft, hire purchase. Then with all the 4 elements, you will get your net assets here. Then they will compare with your net income. So from the net income, it will make up of all the income, either taxable income, non-taxable income. The gain or loss could be a capital gain, disposal, inheritance, gift, windfall. Then they will minus your living expenses in order to get your net income. Then they compare the two. If your asset is much more higher than your income, these are the underreported. So because what is the basic principle under behind the capital statement net worth analysis? Because IRB believes that after a person earn the money, you could either spend it on your net asset, either you invest it in your net asset, or you spend it on your living expenses. So if they are able to find out your net asset and find out your spending, they would be able to know how much of the income that you have earned. So you can say, you could be wondering that since we have declared our income tax returns based on the employment's income dividend, why IRB still want to do these things? So can you try to imagine that a very hypothetical extreme case? So say a business owner and entrepreneur inflated the purchases by, for example, 600,000 in a year. So 50,000 could be the cost incurred. So usually when IRB compute or do a net worth analysis or capital statement, it involves 5 years. So 600,000 for a year. After 5 years, it has accumulated about 3 million ringgit. So when the IRB prepare the net worth analysis or capital statement, they can see there is an increase of the net asset by 3 million by this taxpayer. But if they use the direct method, when the IRB come over and vouch all the documents, the taxpayer still be able to provide the invoices for the purchases of the 650,000 every year. So, but using the indirect method, you would not be able to tell where is the 600,000 came from every year. After 5 years, it will become much more bigger figure where you may not be able to explain to. That is the basic principle and the rationale why the IRB need to use an indirect method to conduct an audit or investigations on a taxpayer. So when you take a look on this is how the capital statements looks like. This taxpayer called John. So we need to put and indicate how much of the cash in hand, cash in accounts, own business. That means all the businesses that he has, investment, all kind of investment made by the persons, either all the quoted shares, so motor vehicles, properties, other debtors. Then directors' accounts, when the directors provide any loan to the companies, other assets, or the jewelry. So they will minus the liability or the loan. So this is how they get the net asset. So they will compare each and every year how much of the increase in that year. For example, in 2014, when they compare with 2013, there is an increase by 1.5 million. Then they will look into the income. Is there any increase? Whether it can match with that year incomes or not. So when you see all the negative figure here, that means this is the surplus. That means the income is more than the net asset. So the surplus is those amount that taxpayer unable to justify where he spent the money to. So you may ask, what if certain year I have positive, certain year I have negative? Can I net it off and pay the net figure or not? No. The IRB say that if you are unable to justify your surplus, that is your surplus in that year. And I can't use the surplus to offset against the shortfall for another year because they are doing a yearly comparison. They are strict on that part. So unless you are doing a mean test, then they are accumulating the years, then they only see the opening and the closing. So that is how it works. So what are the common challenges faced by the taxpayer if the taxpayer is being picked up for a capital statement review? You try to imagine that if today you receive a letter from the IRB and ask you to prepare your capital statement for the last 5 years, and you are given 14 days to prepare or 30 days to prepare, do you have all the documentary evidence on hand or not? Do you have all the bank statements? Do you have the yearly bank statement, monthly bank statement to do that? It is very time consuming and laborious. It's not so easy to compile all this information. And the timeline given by the IRB is really tight. Although you're able to ask for extensions of time, they give you another 14 days, they give you another 30 days. 2 months, can you do that or not? Sometimes, even though when you request for the bank statement, it may take quite some time for them to print out the bank statements for you. So you may not be able to prove your opening capital if the record keeping are not so proper or not so comprehensive. Sometimes we may not be able to explain where is the discrepancy from. So a lot of taxpayers say that these are the most that I have. You ask more than what my spouse knows. You know all already, but I still cannot answer where is the discrepancy from. So this could be quite challenging under a capital statements review. So audit and investigations always come together with penalties. So what is the penalty rate? For a tax audit case, it could be 45% penalty. And if this is a repetitive case, then the penalty could be 55%. For a tax investigation, the penalty rate could be ranging from 45% to 60%. If this is a second offense, that means a repetitive case, it can go as high as 75% penalty. So this is the current penalty rate. Okay, so now we go through some questions that have been posted during the registration form. Bank accounts under joint name, how to declare as assets. So if let's say the bank accounts are under joint name, husband and wife, then it will be based on the ratio. If you do not have any specific ratio, usually IRB will take 50%. We have also seen certain cases where the bank accounts are under parents and children name, but the children are being picked up for the audit investigations. But the children has no idea all the amount, how the amount come from. Then how to provide the supporting documents, that could be quite headache on that part. So so for those bank accounts under joint name, if your name is part of that, then you may need to retain sufficient supporting documents on that part. How does the IRB decide on which taxpayer to focus investigations on by industry, business, or others? So, or the similar question could be, what kind of transactions may trigger IRB for personal tax audit and capital statement review? So this is not like a corporate tax audit and investigation. So they are not going through by way of industry. Industry is usually is for the corporate tax audit or investigations, certain industry problems. So for capital statement review or the personal tax audit, what are the common red flags here? If let's say you have a very significant sums in your bank account and significant increase in your bank account, you have a significant director's loan to the company, for example, in the Form C, you can see that your name is appear there, that you are given a 10 million loan or advances to the company to undertake certain projects, then the IRB will start to question all these things. So, or if let's say you are an entrepreneur, then you have a consistent business loss. So even for company that has consistent business loss, then the IRB could question where is the money come from to sustain all this? How come your business still survive after so many years of the losses? So this could be the question posted. Or if you purchase any luxury items in that year, that may also trigger any audit or investigations. Or if you have any extraordinary wealth versus the declared income, that means your net asset is very high as compared to your declared income. So all these could be potentially lead to any audit or investigations by the IRB. Question 3, offshore incomes keeping overseas and remittance into Malaysia. So if this is an offshore income, foreign source income is not taxable in Malaysia because our Malaysia still adopting a territory tax system. So, but the documentation is very important. So when you remit back to Malaysia, then we need to keep sufficient documents to show that this is an offshore income. But can you imagine that if let's say a taxpayer has a company in BVI, but the taxpayer present in Malaysia most of the time, BVI, you don't need to prepare any audited accounts. All the money parked under, say, Hong Kong bank account, and one day you remit all the money back. When IRB asks you, how are you going to prove that this is your offshore income? What are the documentations that you have? Yes, Malaysia, offshore income, foreign source income is not taxable in Malaysia. But do you have the documents to prove that this is a foreign source income? If you're based in Malaysia most of the time, in order for you to earn the income in BVI, is this a Malaysian source income or foreign source income? That could be another question. So these are the common things that you need to address. So if this is a truly foreign source income that you can justify, then you can use all this money to buy the asset in Malaysia here, no problem on that, as long as you can justify on that part. Question 4A, are taxpayers required to disclose net worth for offshore assets? Under this requirement, offshore bank has to be disclosed. Is bank referring to licensed financial institution under the relevant jurisdiction? Does bank include stock trading account? So for A first. So we also, this is also a common question raised by the clients. Can we not to disclose my offshore assets when we are being requested to prepare capital statement? But sometimes it's not an option for the taxpayers. So from the AEOI, the IRB can see your bank account. See, sometimes the information that received by the IRB could be in very different format currently. So sometimes they could see the description. For example, this is a payment for your monthly installment for certain loan. If you have a loan, a property loan in overseas, do you have a property or overseas property assets or not? So sometimes it's certain information or the disclosures in the AEOI that lead to the IRB get to know that you have offshore assets. So if from the legal perspective, you are required to disclose your offshore assets. But when you choose not to do that, how IRB get to know that, that would be another areas. So does bank include stock trading accounts? Financial institutions include stock trading accounts. So that is quite clear. So question 5, in view of the current lockdown situation, would IRB consider a longer time frame to finalize tax audit or investigation case without increasing the penalty imposed? The IRB is still very active in doing audit and investigation now. They are much more considerate, and then they also accept virtual meetings. But currently, we're also facing some challenges like how to restrict the physical documentations. IRB can be quite understanding, but then they're also under pressure to close the case as well. So they are still applying the same penalty rate. They didn't increase the penalty rate, but I guess the communications with the IRB is very important. If you receive any letter from the IRB, if you need any extensions of time, please communicate with them and not just ignore the letter or ignore the correspondence from the IRB. Must communicate with the IRB in order to get the extensions of time. And how far that IRB could go back for tax audit or investigation or for capital statements review. So I have quoted this section 91 here. IRB can go as far as 5 years after expirations of making an assessment. So the IRB is currently conducting capital statement for YA 2014 to 2019 now. So if you need to safeguard, if you need to be very safe from today after hearing from these sessions, and if you have decided to start your capital statement, you could start from 2020 or 2019 first, but you may need to cover up to 2014 because the IRB have the right to go back for 5 years. So 2014 could be the first year that you need to cover. Question 7, my director has been working for 10 years. How should I start prepare capital statement and when should start? what are the most important documents required in preparing the capital statement if my directors do not have the habit of keeping bank statements and receipts? So I guess this is quite common. And like just now in the poll question, don't know how to start. So if you want to start the capital statement, I guess the easiest way, because no matter how, we may need to start some way if we know the importance of the thing. So if you want to do that, I guess 2020 could be the first year that you can start first, then you go back up to 2014. So bank statement, you still can request from the bank, start to have the habit to save the bank statements, the monthly bank statement or the year-end bank statement. That is very important. Other than the bank statements, you still have other assets, all the property assets, all the properties documentations, shares, the gain and loss, all these things. You also need to keep proper records. Then only you can prepare your capital statement. If you do not have any documentations on hand, then it will be at the IRB advantages, because you would not be able to defend your position. IRB will just give you the capital statement or the mean test, like what I showed you just now. This is the information that IRB has based on their records. If you are unable to defend, you may need to just accept it due to unavailable supporting documents to defend on the position. Question 8. LHDN may never ask for capital statement. Should I bother doing one? So you can see that just now when we talk about the challenges, if you are being questioned or if you receive a letter from the IRB today, how would you feel? I think you need to you need to be very frank to your own feeling. If let's say you are a very high risk appetite, then you say that I will only do it when IRB requests for it. But if let's say you say that I want to be safe, I would like to know my position, because most of the businessmen don't want to go to any war without preparation. So they may say, I want to be safe, I want to know my position, and I want to know how could I defend before they come over. So then you may need to start anytime before the IRB come over. Then at least you have all the proper documentations on hand. So in terms of how can we assist you, okay, for any tax audit or investigations, usually we will segregate our services into 3 phases. So either whether do you need us to come in to help during the tax audit and investigations management, because this phase will be very important. Sometimes certain information or documentations that has already been given by the IRB may not be able to U-turn, and the IRB could have certain perceptions on the taxpayer based on the initial documentations or the information provided. So the management part needs to handle diligently. So then the phase 2 is the appeal handling. For example, when the IRB start to raise their findings, give you the findings, how are you going to counter, how are you going to respond to them, how are you going to put the appeal in, and the post-mortem, how could you improve in the future? What do you need to take notes in the future? So that is for the future improvement. So these are our common services during these 3 phases. And other than that, we also help our clients to prepare capital statement, net worth analysis, or mean test before the IRB come over. Or if let's say you for audit investigations, not just on individual, it's also for company. If you need any help check on the companies, then you need to see where is a gap that you need to close, what are the procedures or documentations you need to keep or to improve in the future. This is how the help check will help from the services that we are providing. Okay. So next we will go to the Q&A session. Let's see whether any questions that are being posted in the Zoom or in Facebook.
All right. Thank you, Mani. Wow, it was really an eye-opener, right? You thought you can stash some money away overseas, with these still new revelations. I think you better start to relook at stuff, right?
Yes.
Okay. Wow. I mean, there are some questions here, and I think most of it has been covered. Let's quickly go over them so that we reiterate what was shared by you. They're saying, okay, are all taxpayers expected to prepare the capital and net worth statement, or it's just when you were selected for audit, I guess you you addressed that, right?
Yes, correct.
Yeah.
So
So
it is
like,
good to have that on hand before the IRB come over, because when the IRB targeting on you, then you are having very limited time to get yourself to be prepared to respond to the IRB.
okay. So it's just um, risk mitigation lah. That if you feel like what you mentioned, there are certain red flags or red alerts. If you think that you are likely to fall within these red alerts, then it's better for you to preempt any of these by preparing your capital or net worth statement. All right. Okay.
Yeah.
Then it was like, how does the IRB estimate the value of the barang kemas, like you said, the anggaran?
Okay. Usually they
Is
will
there
have
a
a
basis?
certain they have certain figures, is a standard figures on that. And then just now I also mentioned about the SMUP, the portal. So it's also quite common for the IRB to issue the annual letters to the jewelry shops and then ask them, who are your top 10, top 20 clients in that year? Can you give me their names and then their purchases, the money, the amount or the value that they have purchased? If your name is being part of the list there, then your figure will be very different. It could be based on that figure.
Okay, that's also something very interesting, because they look at your net worth, right? So they look at your shares, like quoted shares or even property. So someone like who invested in one of those glove shares 3 years ago suddenly has a bumper crop. That means there is a big, huge jump in his net assets. You know, would that be a trigger point? And how to prove? How do they value this? You know?
Okay. So for the net worth analysis, capital statements or mean test, everything is go by cash basis because they need to reconcile with the income that you have earned. So they are not really looking at the current valuation. So for example, like Sean mentioned, if 3 years ago you purchased a glove counter set, then in 2021, you dispose of the shares and then you make a huge gain, and the gain, you put it into a bank deposit. That is how IRB get to know that. So you may need to provide the supporting documents. Your sales is with this figure. Your purchase is with this figure. So I have a gain for this. This is how I have the gain and transfer the money to my bank account. So the documentation is very important.
Wow.
So they are not based on the valuations. If you are a share trader, especially this year or last year, a lot of retail traders, then you may need to keep very proper documentation how much of the gain or loss.
Wow. I mean, okay, I remember I invested in some shares 20 over years ago. Yeah. And I can't for the life of me remember how much I went in. And now it's just ballooned. So how do I show? I also don't know, unless I can, at what point in time, if you say 5 years ago, so what do they take the value as at 5 years ago and look at it now? Or?
Okay, because at first step, I think you need to determine whether the shares that you acquire is before 2014 or not. If let's say you acquire before 2014, then you may need to see how much is the price as at 2014, and how much is the current price now, or the price that you have disposed of. Then how are you going to calculate? Because in fact, for IRB also acknowledge that it's not so easy to do a perfect capital statement, but how to put in with proper assumptions, with a reasonable assumptions, reasonable figures, how you support that, the share price, in fact, in those years, then you take an average figures. So there are a few methods to counter or to handle that.
Okay, from your experience, that means that an investigation officer has some degree of leeway to know that, okay, if you are very honest, you're able to show, and then it's just really that you can't find and stuff like that, then they, even though there's a unexplained sum, they may then say, okay, I think you have been quite honest about it, and they can actually waive it or something like that, right? It's not like they're stuck there. That is, say 4 million, you could explain right down to the last dollar.
In fact, you need to explain last to the last every single dollar, which is very true. In terms of the leeway, is more like how could you give a reasonable assumptions or reasonable justifications. For example, the share price just now. If you can't find what is your entry price, we may take that year. What is the average price for that year? At least you'll find something which is reasonable. But it is not until the extent where this is the figure that this is a discrepancy and shuffle, then they give you 50% cut or something like that. It's not by that way, but at least you must come out with certain documentations and your assumptions in order to defend or justify the discrepancy.
Okay, right. There's a question about dividend income. Would I guess it's evidence, right? Dividend vouchers that is sent by the stockbroking house sufficient as evidence?
Okay, we have seen certain cases where after we provide the dividend vouchers through the IRB, because this is the easiest document that we could get from the company secretary, then after that, the IRB still request for the monthly bank statement to make sure that the taxpayer receive that dividend, because for that taxpayer, when the dividend income become the biggest portion, the lion's share of your net income, then they may scrutinize further and ask you to give them or provide them with that monthly bank statement to make sure you receive the dividend income. So, but not everyone is keeping the monthly bank statement. If you are unable to provide a monthly bank statement, you only provide them with the dividend voucher, they may just ignore the dividend voucher and say that this is not sufficient. So you still have this discrepancy.
Oh, right. Okay. So most of the people nowadays they use online banking, and I recognize that I think the banks only offer 3 months, I think, that you can download. So my suggestion would be is that for you people who have the online banking to constantly download your bank statements and keep on yourself, right? Rather than at the last minute you go and write to the bank, and then I think the bank will charge you also.
Yes, correct. It's per page.
Yeah, per page. Yeah. Okay. Right. Will the IRB reopen a case after the finalization of an investigation? What about finalization with SVDP previously? What's S?
Special Voluntary Disclosure Program.
Okay. Oh, yes, that one. Right. So would they all reopen?
Okay. This is quite a subjective question. I think previously CTIM also posted the similar questions to the IRB. For us, for me, for our team, we have never seen the IRB to reopen any SVDP cases. It also depends on how the taxpayer make the voluntary disclosure in the past. So for certain taxpayers, they really grab the opportunity to rectify. So they have prepared the proper mean test. This is the asset that I have, and I couldn't explain this discrepancy, and I enclose my mean test to the IRB and say that this is I want to make a voluntary disclosure on these portions of income now. So, but for certain taxpayers, they just fill up a form or put certain figure. I want to declare 50,000 as my underreported income without any supporting documents. So after a few years later, then the IRB would think that this 50,000 may not seem reasonable with the information that they have. So that is why the IRB could come back to the taxpayers and ask for further documentations or the information, although the taxpayer has made voluntary disclosure. And for certain voluntary disclosure, the IRB didn't give any clearance. That means the taxpayer submitted, IRB didn't agree or didn't give a formal letter to reply and say that they have accepted that. So under that case, usually it's a hanging case or it's still KIV cases. Most likely that IRB will conduct an audit or investigations on the taxpayer. That's why they couldn't give a clearance letter. So for those SVDP taxpayers, you need to make sure that you keep the closure letter or the acceptance letter by the IRB.
Okay, so if you have that closure letter, can it be reopened? case?
Okay. If you talk about I need to give you two situations first. From the common situations that we have seen so far, because eventually all the SVDP, the IRB still need to keep a record into the system. Sometimes it's just that the system didn't capture that. So for example, we also encounter certain cases where the IRB want to conduct an audit or capital statement review for certain years of assessment where taxpayer has made SVDP. Then we provide them with the clearance letter. Then the IRB say you can exclude those years and only start your capital statement from 2018, 19, and 2020. So that could be quite easy to resolve as long as you can provide supporting documents. But the tricky part is if the IRB has certain documentation or further information that you are under tax evasion, can IRB reopen the file or not? So under tax law, a case couldn't be reopened if a composite assessment or composite agreement has been signed that is under a normal tax investigation. Under a tax investigation is closed, then both taxpayer and the IRB need to sign a composite agreement where that years of assessment cannot be reopened. But for under SVDP arrangement, there is no composite agreement has been signed. So if you talk from the law perspective, would the IRB able to reopen? There is the likelihood to do that. But the IRB has already made a lot of announcements in the newspaper, in all the promotion campaign, and say that the IRB would not reopen that. This is more on from the image, from the governance perspective, should the IRB honor what they have promised to the public or not.
Okay, all right. Okay, that's one here which I'm not quite exactly sure. I think the wording is not quite right, but I think I get the gist of it. It says here it's got to do with the joint management body scenario where they have this income from parking. They charge parking or they sell parking lots. I don't know what it is. Are supposed to be declared tax, but they never did. And there's quite a few years already. And what advice do you give if they want to come clean on this? That means a JMB, I don't know why it says here the tax are grouped under individual. Strange, it's not under individual, right? But anyway, so now they want to come clean because they never declared the parking income. So now they want to declare it. So what is your advice? Contact your private number and...
Yes, correct.
And it's there. Here, you can see it down there, okay? Okay.
Yes, you can save it down and contact me thereafter. Okay. Generally for JMB, like Sean mentioned, the tax, if there is any tax payable, it should be on JMB and not on individual. So need to have a lot more information to find out. And then for JMB, certain income is not taxable as long as you can fall under the mutuality principle. That means the income is received from the members that you are servicing. So certain income, that means what I want to deliver is not all income are taxable. So we may need to examine whether this income fall under the taxable income or the tax exempt income before we can advise you further on that.
Right, great. Okay, then got this last question here, which I think I also raised it earlier. It goes like this, you say, are we required to produce full supporting documents when we're preparing the capital statement? That's what I said. There is also a challenge with years and years and you don't, normally people throw out things, right? Or you can't find it, yeah? Certainly that will put us in a very disadvantaged position of weakness in preparing those documentation to justify the capital statement. So as I already said, how do we deal with it? I mean, I thought, is there some leeway that I try my best and I've shown that certain things are, you can estimate it so that maybe there's a slight shortfall between explaining maybe a few 100,000 or a few tens of thousands. Would then the investigation sort of gives a bit of, okay lah, I mean, agak you're there lah, because a lot of things also estimated by them anyway, right?
Correct.
What's your experience on this?
So eventually, for all the audit investigations, definitely need to come to a negotiation. eventually. So
And that's
from the
where again
negotiations,
the number is down there.
the experts, okay. Okay, so that negotiation, that definitely is a part on the part and parcel of the audit and investigations. It also depends on how you communicate with the officer as well. So for example, you are able to provide the documentations that you have been, give you an example. If let's say you are a professional in the past 20, 30 years and before your retirement, so just close one eye, you know that you can have this kind of assets or the net assets that the IRB asking for. So when you explain to them how you earn your money in the past 20 to 30 years, then in fact the IRB can feel it. They would know that whether is this a genuine story or not. Would you be able to support what you have mentioned? How you get all this money to support the net asset that you have today? So they are not until the extent where each and everything need documentation. So certain documentations, we can tell them that what are the challenges that we have. Sometimes they will propose to you, you can go to land office to get, you can go to somewhere else to get those documentations. So it's
Okay.
not as hard as that.
Right. And I guess it is very difficult to justify sums coming into your bank accounts now if you simply just declare that, oh, it's a donation by my grand uncle from China.
Yes,
How to
not
prove?
just the bank, not just the bank accounts. For certain industry, cash in hand still very important. So some people is still paying certain wages in cash. So they need to maintain quite a huge cash flow. So how to provide supporting documents on that part is also very challenging as well.
Hmm. Yeah, I guess that might be a reason why there is a proliferation of this cryptocurrency movement now of conversion of cash into virtual cryptocurrency. I guess that's where they're going. And I presume from your I mean, we're out of topic now, but it's related that the revenue authorities are now looking at cryptocurrency, right?
Cryptocurrency is also considered as one of the assets owned by the taxpayers. So if you make any gain from the cryptocurrency, then you may need to examine whether is that a taxable income or a capital gain, because there is a basis of trade. How frequent do you trade the cryptocurrency? What is the original intention for buying that? And then how to, if let's say you make a huge gain on that, how are you going to prove the gain is come from cryptocurrency? You may have that challenges as well.
Yeah, it's very difficult to do that because you can't. I'm guessing there are people who squirrel away cash through them because it's not traceable, right? I mean, it's only a number. How do you know that belongs to me?
And then you also need to, eventually you still need to transfer and start or initiate. So if let's say you are unable to explain somewhere in between, that means the process. But for the first step, you still need to get the money and put into the system. That documentation could be used as one of your supporting documentation, or when you sell it eventually, the money that you withdraw still need to go back to your bank statements or go back to your bank account. So that documentation could be used as well.
Okay, one last bit which I was a bit scary too, because you're talking about a joint bank account. So that a lot of this husband and wife, they have a joint bank account, right? And I've seen also quite a lot of these issues where the husband is the one that have this undeclared income coming in and out and big sums, and it's just the wife just trusts the husband, and then after that the guy disappears, and then if the wife gets audited, then real big trouble, right?
Yes. Not just it's very true. I do agree with Sean on this scenario here. Not just on bank accounts, it is also very common that, for example, when a husband running the business I put my wife's name as the company directors or the company shareholders and put in a lot of money or the share cap on all this. When the wife is being questioned by the IRB, definitely the wife has no idea. Not just shares, properties as well, motor vehicles as well. All these are very common.
Yeah, great. Yeah, I know that. So in a way, you have to be a bit savvy, okay, to protect yourself.
True.
Yeah. But then again, IRB wouldn't be going for the ikan bilis the anchovies. They will probably be going for the big fish. Or is that a fallacy?
Okay. Previously, the tax investigations or the capital statements is only targeted or focusing on the high net worth individual. But recently, we noted that it is no longer that way. The IRB could be looking at the senior management team or any directors, because when they are unable to reconcile the director's fee in the Form C and the disclosures in the personal income tax returns, then capital statement or the net worth analysis could come into the picture from that way. So it is not just for high profile persons or a very high net worth individual anymore. So some expatriates also receive the letter or being requested to prepare the net worth analysis or capital statements or mean tax.
Oh, okay. So because it's always the thought that if you are a salary earner, the PCD takes out properly every month, you will likely to be under the radar. Is that still holding true?
Not really. So just now when I mentioned about the director's fee, like the MM2H holder or expatriate, they also receive the salary income. And then there could be questions as well, why not you? But for entrepreneurs, business owner, that is very, very likely, especially for entrepreneurs, because you do not have any audited accounts. So sometimes when they conduct an audit or investigations on your business, is very likely to come together with the net worth analysis or the capital statement.
Okay, all right, Mani, thank you very much. Thank you, Crow. No more questions now. So any last words or takeaways, Mani?
Yes.
Preempt yourself, go and look through your documents. Yeah.
So
okay.
This is just the last slide that I would like to share with all the audience. It's the key takeaways from the entire section here. So I just want to highlight the 5 key points here. Tax audit investigation is still the efficient tools for the IRB to ensure taxpayers are in compliance with tax law. They still need to discuss that responsibility, whether we like it or not. Then IRB is leveraging on big data to get to know you and your portfolio of assets from various sources. So don't assume that the IRB would not look or targeted on you anytime. So it is number 3 is very common that accumulated wealth does not equal to your declared income. What does it mean? Not all income and wealth need to be declared in your income tax returns. So for example, dividend income is tax exempt and you do not need to declare it in your income tax return. So from the IRB eyes, it is very easy to have the mismatch of your asset and your wealth. But how to provide the documentation is the most important part. And then when there is any capital statement review by the IRB, that may potentially lead to another tax adjustment or lead to another tax audit. For example, the children would not be able to explain where is the source of money that the parent gives. So by naturally, the IRB will open the file for the parents in order to find out further where is the source of revenue. So that is could trigger to another audit or investigation. Prevention is always better than cure. So be prepared and respond to IRB tax audit investigations. So that by getting ready your capital statement. So these are the 5 key takeaways. So thank you very much.
All right, hey, thank you all. And this is really, really riveting. I guess after your session, everyone went quiet. And for those of you who are watching from Facebook, look out for us. There is more riveting and eye-opening sessions coming on board by Crow. Again, a warm welcome or goodbye to those that is watching us, and look out for our next sessions. Thank you very much, Mani, and the people at Crow and the technical team at MICCI. All right, goodbye. See you again next time round.
Thank you. Stay safe. Bye.